If you served in the United States military and you were born before 1960, there is a real possibility that your Social Security benefit is smaller than it should be, and that the Social Security Administration has no way of knowing it because the problem is hidden inside your earnings record. This is not about a government conspiracy. This is about three specific situations where veterans routinely receive less than they are legally entitled to, and where a single phone call or a visit to ssa.gov can change what lands in your bank account every month for the rest of your life. Almost 1 in 4 adult Social Security beneficiaries has served in the United States military, according to SSA data, meaning there are millions of veterans in this situation right now. And the reason most of them are being underpaid is not fraud. It is paperwork. It is records that were never updated, credits that were never applied, and laws that changed this year that nobody ever explained to them directly. Subscribe to Nami Finance USA and turn on the bell notification. When laws change that affect what veterans receive from Social Security, you will hear about it here. Let's start with the foundation, because it matters for every one of the three situations we are going to cover. Your Social Security retirement benefit is calculated using your lifetime earnings record, specifically your 35 highest earning years. Every dollar of income that appears on that record, every credit that gets added to it, shapes the final number you receive every month. If anything is missing from that record, or if a law that was reducing your benefit never got updated, you are getting less than you earned. And SSA will not proactively catch it for you. Here is what most veterans do not know. Congress specifically created extra earnings credits for military service, and those credits were designed to add directly to your lifetime earnings record and increase your benefit. But those credits have specific rules depending on when you served, and if you served in a particular window of time, there is a chance they were never applied correctly. Way number 1, missing military special earnings credits from 1940 through 2001. Here is exactly how those credits work, because the amount depended on when you served. From 1957 through 1977, for each calendar quarter in which you received active duty basic pay, SSA credited you with an additional $300 in earnings. From 1978 through 2001, for every $300 in active duty basic pay, you received an additional $100 in earnings, up to a maximum of $1,200 per year. For veterans who served between 1940 and 1956, your Social Security record may be credited with $160 in earnings for each month of active duty. These veterans did not pay Social Security taxes at the time, but Congress created the credits to ensure that their military service counted toward their benefit. Now here is where the problem arises. For veterans who served from 1957 through 1967, special extra earnings are added to your record when you apply for Social Security benefits. That means the credits are not added automatically during your working years. They are added at the point of application. And if you applied for Social Security without bringing your DD-214 form, or if the SSA representative did not correctly note your military service dates, those credits may never have been added. If you believe you qualify for special credits, check with a Social Security representative by calling 1-800-772-1213 or visiting your local Social Security office to ensure they have been added to your work record. There is one critical clarification to make here, because misinformation about this topic has circulated widely. The extra military earnings credits are not an additional monthly check. They are credits added to your lifetime earnings record, which may result in a higher monthly payment depending on your full earnings history. The impact on your benefit varies based on your entire work history, but for veterans whose active duty years fall in their highest earning window, these credits can meaningfully increase the benefit calculation. The way to verify this is to log in to your My Social Security account at ssa.gov/myaccount and open your full earnings statement. Look at each year you served on active duty. If those years show lower earnings than your actual military pay, or if they are blank, that is a red flag worth investigating with SSA directly. Bring your DD-214 to your local SSA office or have it ready when you call. Way number 2. You served in both the military and as a federal civilian employee under CSRS, and you may not have received your full Social Security Fairness Act payment. This one is more specific, but it affects a meaningful number of veterans born before 1960 who built careers in federal civilian service after leaving the military. Here is the background. For decades, two provisions in the Social Security Act, called the Windfall Elimination Provision and the Government Pension Offset, reduced or eliminated Social Security benefits for people who received a pension from employment where Social Security taxes were not paid. These provisions reduced or eliminated the Social Security benefits of over 3.2 million people who received a pension based on work not covered by Social Security. The primary group affected by this rule was federal employees hired before 1984 who were covered under the Civil Service Retirement System, known as CSRS, a pension system where workers did not pay into Social Security.
Now here is what changed. The Social Security Fairness Act was signed into law on January 5, 2025, and it eliminated the windfall elimination provision and the government pension offset entirely, retroactive to January 2024. As of July 7, 2025, SSA completed sending over 3.1 million payments totaling $17 billion to beneficiaries eligible under the Social Security Fairness Act, 5 months ahead of schedule. For most affected people, the average retroactive payment was approximately $4,000 to $8,000, and the average monthly benefit increase was around $350 per month. So why does this still matter in 2026 for veterans? Because a year after the Social Security Fairness Act, some retirees are still waiting for full benefits.
There were two groups that SSA handled differently during implementation. Those who had already formally applied for Social Security benefits had payments processed retroactively to January 2024, while those who had never applied because they assumed their payment would be reduced to zero or an insignificant amount received benefits calculated only from 6 months before their application date. Many in this second group wonder why they were not entitled to benefits back to January 2024, as the Act provided retroactive payments. Additionally, if you're entitled to a retroactive payment from the Social Security Fairness Act but have not received it, you should first verify that your mailing address and direct deposit information on file with SSA are accurate and up to date. Who does this apply to specifically for veterans? If you served in the military, where Social Security taxes have been paid since 1957, and then transitioned into a federal civilian career under CSSRS before 1984, where you did not pay Social Security taxes, you may have been affected by WEP. Although federal employees who paid into CSSRS were exempt from FICA taxes, many had worked in Social Security-covered employment before, after, or even during their federal employment, as well as serving in the military, where FICA taxes have been paid since 1957. If you fit this profile, military service followed by a CSSRS federal civilian career, and you are not certain whether you received your full Fairness Act adjustment, log in to ssa.gov/myaccount and check your current monthly benefit amount. Then call SSA at 1-800-772-1213 and ask specifically whether the WEP and GPO adjustments from the Social Security Fairness Act have been fully applied to your record. If you never filed for Social Security benefits because you assumed WEP or GPO would eliminate them, you can apply now at ssa.gov/apply. Way number 3, you have an IRMAA Medicare surcharge based on income you no longer earn. This one is not exclusive to veterans, but it hits veterans particularly hard because of a common retirement pattern that creates the exact scenario IRMAA punishes most aggressively. Here is the situation. Many veterans born before 1960 retired from military service and then worked a second career in the private sector. When they finally retired fully from that second career, often in their late 50s or early 60s, their final working years showed peak income on their tax returns. And here is the problem. Medicare uses your income from 2 years ago to calculate your current premium. For 2026 IRMAA, the look-back year is 2024. If your 2024 income was high, but your 2025 or 2026 income is lower, you likely qualify for an appeal. In 2026, IRMAA surcharges range from $1,148 per person per year at Tier 1 for income above $109,000 as a single filer, all the way to $6,936 per person per year at Tier 5. That surcharge is deducted from your Social Security check every single month before it ever reaches your bank account. The appeal form is called SSA-44, the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form. The 8 qualifying life-changing events include work stoppage, meaning retirement, work reduction, death of a spouse, divorce, loss of income-producing property, loss of pension income, employer settlement payments, and any other event that caused a significant income reduction.
Retirement from a second career is the most common qualifying event for veterans in this situation. If you retired from private sector work in 2024 or 2025 and your Medicare premium in 2026 is above $202.90 per month, you likely qualify to appeal. You download Form SSA-44 at ssa.gov/forms/ssa44.pdf. Document your qualifying event, your final pay stub, your retirement letter, or your employer confirmation, and submit it to your local Social Security office by mail or in person. IRMAA appeals typically take 30 to 90 days to process, and if approved, adjustments may be retroactive to the date of the event, resulting in refunds for overpaid premiums. The key is not to wait. Every month you delay is another month of the surcharge coming out of your check. And if you have already overpaid for several months, the refund applies retroactively once the appeal is approved.
Here is the summary. If you served in the U.S. military and were born before 1960, check these 3 things. First, verify your military special earnings credits. Log in to ssa.gov/myaccount and review your earnings for every year you served on active duty. If the numbers look low or years are missing, bring your DD-214 to your local SSA office and ask whether your credits from 1957 through 2001 were correctly applied to your record. Second, if you served in both the military and as a CSRS federal civilian employee, confirm that your Social Security Fairness Act adjustment has been fully processed. Log in to ssa.gov/myaccount to check your benefit amount and call SSA at 1-800-772-1213 if you have any doubt. If you never applied for Social Security because you assumed WEP or GPO would eliminate your benefit, apply now at ssa.gov/apply. Third, if your Medicare Part B premium is above $202.90 per month and your income dropped because you retired, file Form SSA-44 to appeal the IRMAA surcharge. Download it at ssa.gov/forms/ssa-44.pdf and submit it with documentation of your qualifying event as soon as possible. Your service earned you these benefits. Making sure you actually receive them is the only step left. Subscribe to Nami Finance USA so no rule change affecting what veterans receive ever goes unnoticed.